Your phone bill is about to compete with your bank statement. And somewhere in India's banking corridors, that thought is making people uncomfortable. 2.2 billion US dollars. That's not an investment number. That is a signal. Last week in small town in Uttar Pradesh, a vegetable seller named Asha Devi used her phone to receive a 1,200 rupee payment. No cash, no wallet, just a QR code. By evening, she had paid her supplier, topped up her mobile recharge, and transferred money home, all through one device, one network. Now imagine if that same network also offered her credit, insurance, savings. Suddenly, your telecom company is not just carrying your calls, it is carrying your money. On the 23rd and 24th of February 2026, Bharti Airtel confirmed it will invest around 20,000 crore rupees into its financial service arm. Airtel Money, not a trial balloon, not a side experiment, serious capital. But why would a telecom giant dive deeper into finance? Because telecom is no longer the real story. And that brings us to math. Airtel's market capitalization stands above 8 lakh crore rupees. It has over 350 million wireless subscribers in India. Average revenue per user sits near 200 rupees per month after tariff hikes. Sounds comfortable, but do multiplication 200 rupees into 350 million users equals roughly 70,000 crore rupees in monthly gross revenue potential. That is more than the annual revenue of airlines like SpiceJet in several recent financial years. It rivals what consumer giants like Dabur India generate over an entire year. In just 1 month, it approaches the full year top line of mid-sized private banks such as RBL Bank. Big number. Tight margins, spectrum payments, 5G rollout, network expansion, debt servicing, telecom burns cash. So where is the real upside? Finance. India now processes more than 12 billion UPI transactions every single month. Annualized, that is over 140 billion transactions. The value runs into tens of lakh crore rupees monthly. The broader Fintech market is projected to cross 1 trillion US dollars in transaction value before this decade ends. That is not a pond, that is an ocean, and Airtel wants it. But oceans are crowded. PhonePe commands roughly 45 to 50% UPI market share across several months. Paytm still has tens of millions of wallet users despite regulatory setbacks. Jio Financial Services, backed by the Reliance ecosystem, sits next to a telecom base of over 400 million connections. This is scale warfare. So why enter a knife fight? Because Airtel already controls 350 million mobile relationships. If just 10% adopt a financial product, that is 35 million customers. If 20% engage, that is 70 million customers. This is the size of a mid-sized bank. And payments are only the entry point. Digital lending in India is growing at a double-digit rates annually. Insurance penetration remains below 4% of GDP. Mutual fund penetration is under 10% of households. Headroom everywhere. Offer a micro loan of 10,000 rupees to 5 million users. That alone is a 50,000 crore rupee loan book. Add insurance premiums, add wealth products, add merchant lending. The math compounds. But here is where the script changes. Reserve Bank of India has tightened digital lending rules. Certain fee structures are capped. Non-compliant apps have been shut down. Compliance costs are rising. Capital buffers matter more. This is not 2021 anymore. So is Airtel diversifying or defending? Remember, India still has some of the cheapest data tariffs in the world. A 100 rupee increase in monthly ARPU across 350 million users can swing annual revenues by 35,000 crore rupees. But tariff hikes are politically sensitive. They cannot happen every year. So if you cannot increase what customers pay for data, you increase what they do with that data. And that shift changes power. Telecom networks are turning into financial rails. SIM cards are becoming identity keys. Apps are becoming distribution channels for credit. If Airtel succeeds, it will not just compete with fintech startups. It will compete with banks that have decades of legacy infrastructure and cost burdens. 2.2 billion US dollars says Airtel believes future margins are not in megabytes. They are in moving money. And here's the bigger question. When your mobile network controls your connectivity, your payments, your credit, maybe even your insurance. Who becomes more powerful? Look at China. WeChat started as a messaging app, harmless, convenient, social. Then it layered payments, then credit, then wealth products, then insurance, then ride hailing, food delivery, ticket booking. Today, WeChat Pay is not just a payment option. It is financial infrastructure embedded into daily life. This is the super app playbook. Own attention and lock in users. Now come back to India. Airtel already owns connectivity. It owns SIM authentication. It owns billing relationships. It has 350 million customer touchpoints. If it successfully layers payments, lending, insurance, and wealth products on top of that base, the shift is not incremental, it is structural. So the obvious question becomes unavoidable. Is Airtel trying to become India's WeChat? Tell me in the comments below. This is Indu Tyagi and you're watching Want Stats. Don't forget to like, share and subscribe. Stay tuned to Want